everyone. If you're watching this lesson, it means you're already interested in real estate investment and most likely you have already classic list in mind: Dubai, Bali, Turkey, or maybe even Thailand. And for the most people, the Maldives are still about the honeymoon, a white sandy beach, and the overwater villa once in a lifetime. Today, I want to show you a different side of the Maldives as a real, very concrete investment market. My name is Yulia. I am Director of Sales at TEUS Group. In this video, we look at how the real estate and development market works here, who has already entered the Maldives with a serious capital, and why right now in 2026 it makes sense to see this market not only as a tourist but also as investor. Over the past few years, the Maldives have gone from the postcard picture to one of the most awarded tourism destinations in the world. For 6 years in a row, the Maldives have been named the world's leading destination at the World Travel Awards, as well as the world's leading green destination and the best destination in the Indian Ocean. You can think for it as the Oscar of tourism, where both the industry and the travelers vote. The 2024, the Maldives consistently reached the level of 2 million tourists per year. By the end of 2025, the country welcomed around 2.2 million visitors, which gave almost 10% growth, and tourist revenue exceeded $5.5 billion, setting a new record. The average length of stay is about 7-8 nights, and what guests spend on accommodation and service here is higher than in most beach destinations in Asia. If you look at hotel numbers, the Maldives are a real rocket in terms of price per night. In 2023-25, the average daily rate here grew faster than in most resort markets. In 2025, resorts reached the average occupancy of a bit more than 71%. As a result, the average revenue per available room, RevPAR, on the Maldives is several times higher than in many familiar markets like Bali or some European beach destination. In other words, you're paying not only for the beautiful view, you are buying into one of the most profitable resort markets in the world in terms of revenue per unit. Maldives as a country has a limited land. Now, an important part how the country is structured and why land here is truly limited resources. The Maldives are an archipelago of about 1,190 islands, grouped into a double chain of 26 atolls. On the map, the country is stretched for roughly 870 kilometers from the north to south and covers around 80,000 square kilometers of ocean. But the land area is only about 30 square kilometers. This means that in terms of the land, the whole country is smaller than the city of New York, which is about 780 square kilometers, almost 3 times more than all Maldives land combined. Out of these 1,190 islands, around 200 are permanently inhabited. Roundly 150 islands are used for the hotels and resorts, and for the rest are either inhabited or have a special use. For an investor, this is the key point. We are not dealing with a big city that can grow endlessly upwards or outwards. We are dealing with an archipelago with a very specific number of slots for tourism products. To understand the level of the market, it is enough to look at who is already there. Today, almost all major global hotel groups operate in Maldives, from the large international chain to ultra-luxury brands like Four Seasons, Waldorf Astoria, Hilton, Marriott, Aman, Bulgari, Mandarin Oriental, and many others. In the premium segment, upscale and upper upscale brands such as Radisson Hotel Group are also very active. If we're looking at the market through the eyes of developer, the picture is also very clear. According to international consulting companies, several dozen new resorts mixed-use projects are now in planning or under development in the Maldives, and around 80% of upcoming openings are in the luxury segment, which a smaller share in upscale. For the next 5-7 years, flagship projects from global players have already been announced, from Trump International Maldives and Bakrat Hotel and Residences to project by Bulgari Hotels and Resorts, Amman and Group from United Arab Emirates. Developers from United Arab Emirates deserve special attention. Based on published estimates, Emirati groups alone plan to invest several $billions into the Maldivian luxury and ultra-luxury segment by 2030. For us, this is the direct signal. If large public companies come here with such budget, it means they have already confirmed two things for themselves: long-term demand and the strength of the legal and financial framework for this market. If we observe how major developers and funds enter new market, the logic is almost always the same. They come in at the stage of structure expansion when the airport capacity is growing, their destination is becoming easier to reach, but the market is not yet overheated by private money. This is exactly what we see in Maldives today: a new terminal, expansion of regional airports, more flights, and at the same time a very underdeveloped niche for private investors in the resort segment. It is the classic entry point for professional capital. Tourism is the main source of income for the Maldives, and the state is very open about this. The strategy is to earn more from high-quality tourism over the long term. First, about strategy. The country's goal is to keep tourism receipts above $5 billion a year and gradually grow this figure. That is why the Maldives are moving away from a simple beach holiday-only model towards more expensive formats. The country is actively developing business and corporate travel, MICE, and incentive tourism. When companies bring their teams for a strategy session, off-site and incentive trips, urban tourism in Mali and other centers is also gradually forming, so the guests spend more time and more money in country. Next, where these guests actually stay. On one hand, the Maldives continue to develop classic private island resorts. This is the national showcase, the highest rates and the strongest marketing effect. On the other hand, more and more attention is given to inhabited islands. The states encouraged the creation of hotels and upscale resort there because that means jobs, local business, and more sustainable tourism model. For us, this matters because exactly in this segment, more opportunities appears for private investors and more projects with a more accessible entry ticket. From the strategy, let's move to infrastructure. For all of this to work, the country needs to be physically expanded. In 2025, a new international terminal at Villana Airport in Mali was launched, and the project of about $600 million that significantly increased capacity and comfort for passengers and allowed the country to handle more flights and larger aircrafts. At the same time, regional airports and domestic island transport are being upgraded so that new resorts on different atolls are truly accessible for guests. If we look at the market not in general words but in numbers, the picture becomes even clearer. Let's break down how tourism demand and rooms inventory is distributed in Maldives today. According to official statistics for 2025, the accommodation structure looks like this. About 68% of the room inventory is in private island resorts, around 24% is in guest houses and budget segment, and only 3% segment is in classic hotels. Around 5% comes to live aboard boat and yacht. So almost 2/3 of all tourist capacity have historically been in the private island format, while the usual format of comfortable 4 or 5 stars hotels in inhabited island is just a few percentage of the market. Now let's look at occupancy. In the upscale segment, average occupancy reached about 72%, which is the highest among all accommodation formats. For comparison, luxury resorts on average are around 65%. Guest houses are around 58%, and this is a very important signal. The most stable and dense demand is in price range of around $200-$350 per night. If we simplify it, there are fewer people worldwide who are ready to pay $800-$1,500 per night, and there are many more who want a high-quality premium holidays and a reasonable price. And here we meet the key imbalance in the market. Globally, mid-premium and upscale segments usually account for up to 50% of all tourist booking. This is the main mass of sovereign demand. On Maldives, this segment is physically almost absent. Historically, the country grew through the one island, one resort model, meaning private island resort. In parallel, the budget guest houses segment developed, and the middle premium format simply fell out of this market structure. And as a result, we have a very interesting situation. Demand exists, money is there, tourists are there, but there is a shortage of product for this demand. And this is where the strongest investment logic appears, because investment is not about the most expensive asset, it is about underserved solvent demand. Upscale hotels on inhabited islands solve several tasks at once. They give guests their real Maldives, experience ocean, design, service, emotions. They remove expensive transfers and complicated logistics from the bill. They allow you to keep a comfortable price level, and at the same time, they show higher average occupancy and more stable P&L. This is why we see upscale properties on inhabited islands as the most rational and promising entry format in Maldives in terms of yield, risk, and long-term growth. Now let's move to what directly concerns investors. Thanks to changes in Tourism Act, the government allows resort island leases to be extended up to 99 years, giving developers and investors a long, predictable ownership horizon. Historically, the Maldives were the markets only for big players, fund corporation, billion-dollar developers. A private investor simply had no way to enter. Today, the situation has changed. There are structured resort projects, branded residences, and clear legal model. And this is exactly why Maldives are only now starting to open up as a market for private investment. Here, it is important that you feel the main idea. The Maldives are not a chaotic market. This is an industry that the state is deliberately developing and making transparent for investors in terms of traffic, infrastructure, and the rules of the game. And now, at the end of this lesson, let's briefly sum up. Why are the Maldives interesting for an investor in the first place? First, highly average spend and the premium guest. People come here who are ready to pay for the privacy, service, and the unique experience, not for the cheap package. This supports high ADR and RevPAR and gives a strong base for income-producing resort model. Second, strict land limitation. In total, the country has about 300 square kilometers of land, less than a large city, and only part of this land is suitable for tourism. This creates a structural shortage of land and, as a result, a high-quality product. Third, the presence of global brands as developers. In Four Seasons, Bulgaria, Amman, large United Arab Emirates Group, and international hotel chains like Radisson are building here. It means the market has already passed their internal filters for return and risk. Fourth, the clear state strategy. We see support for private investment and contribution development of tourism and infrastructure. So, at this point, you probably have a natural question. How do the Maldives look compared to markets we already know well? Dubai and Bali are familiar destinations with clear pluses, minuses, numbers, and risks. And this is exactly why the next step is calmly, without emotions, compare them with the Maldives. In the next lesson, we will break down three markets side by side. We will look at yield, legal structure, liquidity, rental economics, growth potentials, and the real role of each destination in investment portfolio. After this comparison, you will have a very clear understanding of why an investor needs the Maldives at all, and in which scenario this market becomes especially strong.